Hello, inflation numbers. If you've been following along for any amount of time, you know that the October report that was released this morning is the report I've been talking about since March of this year. As the report, we could see some meaningful gains on inflation. And we saw exactly that. The report came out today, beat expectations, dropped inflation from 8.2 down to 7.7%. Now, I want to show a chart really quick and talk about why I've been talking about this report as the one we could see as some meaningful gains. So let's dive into this really quick. This chart here is breaking down the inflation on a month-over-month basis. And I think it's important to understand how inflation is calculated on an annual basis. You basically add up all of the month-over-month increases for the last 12 months to get your annual inflation rate. This is measuring the core, which is a 6.3. So if you add all these numbers up, you end up with 6.3% after some minor adjustments. We've been talking about this report because July, August, and September, when September's reading came out, the reading for September of 2022 replaced a very, very low reading from September of 2021. And we've been eyeballing this October reading as a very high reading from 2021. That if the Fed could make some meaningful gains on inflation this year in October, that dropping out a high number from last year with a low number for this year, we could see some gains. And that's exactly what we saw. So this is the reason we're seeing it, is we dropped out the 0.6% increase from 2021 and replaced it with a very, very low increase in inflation year over year for 2022. Now, what we're seeing in the bond market is amazing. We've seen the bond market drop by 24 basis points on the 10-year Treasury. That's a level we haven't seen in 30 days. Mortgage rates are on the improvement this morning. Now, we do have to be somewhat cautious that this could be a little bit of a knee-jerk reaction. We talk about this after the Fed meeting. Markets move wild. Typically, it's a knee-jerk reaction, and we could see some retracing of steps to a higher level this afternoon, but we're going to keep an eye on it. As of this morning, this is what we've been waiting for. This is what we've been hoping for in the mortgage industry. We feel like we have hit the peak inflation and we are now on the downward trend. And if you followed me for any amount of time, I've explained over and over and over again, the federal funds rate, that the Fed hiking the federal funds rate is not the negative against mortgage rates. Them raising the federal funds rate is not going to raise the mortgage rates. Inflation is what has been driving mortgage rates to the highs we've seen. And if we've seen peak inflation and now we're seeing it begin to retrace and come backwards, there's a very high probability that the Mortgage Bankers Association forecast of 2023 mortgage rates down at 5.4% is going to come into fruition. So stick with me. We're going to watch the markets throughout the day, see if we have any kind of retrace from this potential knee-jerk reaction to the markets this morning. But overall, super, super good news for the mortgage industry, for the real estate industry, with today's reading of October's inflation numbers. I appreciate your time. If you have questions specifically on this, reach out to me. 904-500-EPIC in North Florida. In the Panhandle, it's 850-500-EPIC. South Florida, 954-222-EPIC. And in the Atlanta metro area at 770-525-EPIC. Thanks for your time today and have a wonderful rest of your week. Take care.